US stocks did not like the 245% tariff on China, as the stock markets closed sharply lower yesterday, following a warning from Nvidia about major changes from new US curbs on its chip exports to China. Now, adding to the market's concerns, Fed Reserve Chair Jerome Powell stated that US economic growth seems to be slowing down. The tech sector was hit the hardest, with chip makers dropping due to the ongoing trade restrictions with China.
U.S. stocks ended sharply lower on Wednesday, with the Dow dropping 1.7%, the S&P 500 losing 2.25%, and the Nasdaq nosediving 3%. Speaking at the Economic Club of Chicago, Federal Reserve Chair Jerome Powell said larger than expected tariffs from President Trump likely mean higher inflation and slower growth. Powell added that the central bank is waiting for greater clarity before considering policy changes. Stocks added to early declines after Powell's comments. Michael Landsberg is Chief Investment Officer at Landsberg Bennett Private Wealth Management.
I think the market hoped that he would be clairvoyant and tell us where everything's going to go. I think there was talk there that the tariffs were going to affect earnings later on, and he didn't necessarily say how much it was going to be, but obviously the idea that it was larger than expected in terms of the tariffs, I think scared some of the market participants to say, hey, maybe earnings may decelerate more than we're expecting.
Among individual stocks, chip makers plummeted due to U.S. trade restrictions with China. Nvidia shed nearly 7% after the AI chip leader said it would take a $5.5 billion charge due to the U.S. government's limit on exports to China, a key market for one of its most popular chips. Rival Advanced Micro Devices, which flagged charges of up to $800 million, fell more than 7%. And shares of Dutch chip-making tools giant ASML also dropped 7% after it warned that Trump's tariffs had led to more uncertainty about its outlook.
And well, you heard it, but let's get a little deeper into it. Nvidia has announced that it will take a $5.5 billion charge after the US government restricted exports of its H20 artificial intelligence chip to China, a key market for one of its most popular products. The chipmaker stated that the decision is a direct result of US move to curb its shipments to China. Take a look.
Nvidia is taking $5.5 billion in charges over US trade restrictions. The chipmaker said Tuesday that the move is a result of Washington curbing its shipments to China. The same day, the State Department said it was further limiting the sale of the company's H20 chips. That was the most advanced model still permitted for export to China after earlier sanctions. The new move also affects products from rival firms like AMD. Nvidia said US officials were concerned the chips could be used to build supercomputers. Washington has tried to restrict sales for such uses since 2022. On Tuesday, the Institute for Progress, a non-partisan US think tank, said some Chinese firms were probably already breaching those controls. It identified gaming giant Tencent as likely to have used H20 chips in a supercomputer. It said the computers that trained the DeepSeek AI model probably also broke the rules. Nvidia shares plunged around 6% in after-hours trade following the latest news, with AMD down even more. Donald Trump's sweeping global tariffs are also set to be a headwind for US chip equipment firms. Reuters sources say industry calculations put the total cost to the sector at more than $1 billion per year. Among the most exposed companies are said to be chip gear makers like Applied Materials, which didn't respond to a request for comment on the calculations. Costs to the sector include lost sales and the expense of finding and using alternative suppliers for complex components.
All right, and staying with the trade wars and the tariff wars which are ensuing, now let's listen into what U.S. Federal Reserve Chair Jerome Powell said on trade policies introduced by the Trump administration.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Where we are now, again to your question, is The administration is, as I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So unemployment is likely to go up as the economy slows in all likelihood, and inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public. One is just the size of the effects, and as I mentioned, the tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases. So that's one. The second one is how long does it take for the tariffs to have their effects on inflation? To the extent it takes longer and longer, that raises the risks that the public will begin to experience higher inflation. They'll come to expect it, and companies will come to expect it. So that risks higher inflation.